is going on, traders? Today it's just gonna make. I'm not gonna get too deep into like astrology or anything like that. I just wanted to make a nice price action video. And holy smokes, is my computer, everything's just running slow. And it shut some stuff down. We got lots of stuff in there. Alright, so I'm gonna make. People were asking questions about like the time frame, like does it work on things work on the 1 minute to 5 minute chart or something. The time frame you're looking at doesn't matter. Like price is price. It's gonna be at a certain X and Y axis at any point in time that you pull your chart up. Doesn't matter if I'm on the 3 minute or the daily chart, price is still at one. It's all about just what candle. I mean, that's irrelevant. And when you're looking down at these lower time frames, even like the 15 minute, even like the hourly chart, you're not really seeing, unless you're zooming way out on the hourly chart, here's the last major move up here. So you're really not seeing all the levels that you want to be seeing. So to me, I work off of the monthly with a top-down analysis. Right, so it's monthly, weekly, daily, 4 hour, and they're all fractals that need to blend together. That's very important. Now I could show you this strategy, like how it worked back here or whatever, but I'll just do it in real time with where we're at now. So all I'm doing here is grabbing it's called I had a video on this before, but I think I took it down. It wasn't on YouTube, it was on Facebook, but I call it the open high low close strategy. And guys in stocks are looking at, they're really concerned about each close, each lowest low, each highest high, each open price. So I've just kind of developed a really simple strategy based off of that. So you can see on the monthly, I've taken the open here, that's the open, the high, the low, and the close. Right, and now what I'm going to do, if TradingView wants to cooperate, well, just to keep it a little more clean, I'm going to, you don't need to do what I'm doing right here. This just adds to it a bit. You can keep it simple just with doing like a top-down weekly and then add your lines, but here I'm going to show you, I just take a retracement from the low on the previous month up to the high, and since you can't see the lines, I just move it over one to the next bar. Now we can see the lines. Right back here there's no lines, over here you can see some lines. So, and then now I do the same thing but in reverse, so now I have levels going up as well, right? And on this case I would have to move the first one over. So that's that, and I just want to make sure everything's locked up here. Bing, bing, bing. Whoops. Bing. Alright. Now, we're going to say, okay, so that was the month that we're first measuring, and I'm just going to mark that white with, I'm going to make the vertical line to match the horizontal, right, on the monthly chart, and then that would be this month that we did this on. You can literally do this as soon as the month's candle close. You set your time frame, and then you just move out a vertical time frame. There's 1, 2, 3 months, right? You can do whatever, however many you want to do, but this keeps it nice and simple. So I've got the fibs on there both ways. By all means, you can try gain ratios, get creative with things. Here's the weekly chart. When I drop down, you can see, on the monthly chart, you have a bearish engulfing candle right here, and a bullish back here. On the weekly chart, we get a bearish engulfing candle here, but then followed by a bullish, not quite a bullish engulfing candle, but basically a bullish engulfing candle here. So, I mean, chart patterns and everything, waves, they can be a problem. Waves and harmonics are probably the only somewhat solid, chart patterns to be trading, other than, if you can identify the major direction, like if I could identify that we should be moving up on this leg, because whatever we were down here and we should be moving up. You know, getting in on those lower time frames is okay. If you can identify that major direction, but you know, with bull flags and pennants, those basic price continuation patterns, right, where you get that little pullback and then you want to ride it higher. So like in there, that would, I'm looking at the weekly chart right now, so like this isn't really a good example, but on the, you know, on the lower time frame. So if I were to drop to the 4 hour here, like this could be a bullish flag pattern right here to buy that up, right? Boom, because price has been going up. You could buy this longer. These are all kind of little patterns, right? The price has been up, pulls back, you make some money on the upside here. Things like that, right? And then on a larger scale, that's kind of it on a larger scale, right? We have an impulse up, we get a pullback. It's just your basic kind of flag patterns, channeled like patterns, right? So, get that magnet off there. So your basic channel patterns, you know, dropping down to like the 1 hour. That's where you can really see them in here, right? That's not too bad, but the problem is having the confidence in, you know, in identifying the, you know, the major direction and really riding out things to substantial targets, which is actually going to pay you something, right? So anyways, I want to go back to the weekly. We've got our monthly lines on here, right? I'm on the weekly now, and we're getting engulfing candles and things, but you can see things have moved up nicely. But in here in the weekly, you can kind of crunch your fractals even more and say, okay, well, here's this week. Make sure your magnet tool is on. I'm just going to map these out, and I'll make them a different color, a different size there or something. Map out last week. I'm just taking the previous, right? So the previous month, and then now I'm taking this previous week. Wow, TradingView is being a prick right now. Okay, so that would be this week. I'm going to switch that up. Color code it just so it kind of is a lot easier on your eyes to see things. And you can see within the month, boom, we've got a couple more weeks to go. So it really breaks things down within naturally in a nice time sequences. You know, I'm not counting bars or anything like that. Just breaking them up in months, weeks, days to come. Alright, so I've done the same thing on the weekly now, and now I drop down to the daily, and you can see, you know, these fib ratios are starting to really show themselves, right? We've rallied up to the 1414. You know, is that 1618 going to come in? I don't think so. I mean, we've kind of hit the bat pattern here. We had went in the astronomy, we went square, or excuse me, trine as well. We're deep into trine here. You know, we were trine back here even, so on this candle. So it's just a simple, effective way. You can by all means do it here in the daily as well and keep dropping, but I think this is nice, just you know, having the monthly and the weekly. This is more than enough on your charts, in my opinion. I'm down here on the daily, you know, maybe you can start looking at harmonics in here, right? Like this bat pattern in here. This is just how I crunch fractals from the top down. Very important, right? So, you know, we've came up to the 1414, we've got a bat pattern here. This is a nice place to manage risk. You know, the bat pattern would say stops above X, but you know, you can manage risk a lot tighter than that if you want, right? When price starts dropping below these levels, here's maybe a nice little trade with stops above here, right? You don't want to see it closing above this daily close. At that point, you need to know that you're wrong, and that's not going to be too dramatic when you drop down to the 15-minute chart or something, right? Let me go back up to the daily where I was just looking at, and I'll make a nice big huge bold line so we'll know where we're at. Nice pink line. And you don't want to be seeing price closing higher than that, even if you're, again, if you want to, this is doing it even more dramatic, right? This would be the previous day. There's definitely a nice trade that takes place at almost all times. from the daily right down, you know, it doesn't matter what time frame. I went to the 15 minutes, I can go to the 3 minute, whatever. Once you're breaking below these levels, fine, enter here. You can chase price right there. You know, breaking below these levels, chasing price, massive spike. You know, when you're dropping down to the you're taking profit. If you're trying to be a scalper, and this is high level trading, I do not recommend anybody that's watching a video right now to, you know, to hone in on their strategy and get better with themselves in trading. You should not be doing this. This is high level shit, trading this stuff. Stay away from that. Stay on these monthly reads, these nice monthly reads, right? Monthly, daily. We got the daily bat pattern in here now, right? And we have our little levels there, the horizontal levels, which, you know, that was calculating the daily. We really don't need those. But that was just to show you, you know, if you want to be scalping, making that, you know, quick money, high leverage plays, that's high level stuff. It's not easy to do. And, you know, you could easily blow an account by what's called death by a million cuts. A bunch of little tight losers on the 15-minute chart. You start with like fucking 10 grand in your account, and then you boom, you're down to like 9,600, then you're down to like 9,200, and it just keeps chipping away. When you have established targets, when you're printing, you know, just whatever your system is, doesn't matter if you're printing price through astrology, if you're just trading harmonics. I now have, if I'm just trading this basic harmonic, I know my target is down in this 382 and then a 618, right? So I have my established targets, my established stops, and you need to let those run out. But it doesn't matter how you do that. If you want to do that with waves, you know, I just showed you this system here because it's very nice with, you know, by this week we're here, we've came up, we're now in this week, we're probably going to get some setback, maybe a little bit of jolt here, but you're definitely expecting maybe a couple weeks to draw. It just gives you a nice bigger perspective, and so you don't give a shit about what these little 3-minute time frames are doing. You know, if you want to be super stingy with your money, then by all means go ahead and enter down there. But you know, even just drop into the 4-hour here, seeing that we pinged up, and this is a beautiful candle to be getting short. When we spiked up into that 1414, you know, really setting up a nice daily bat pattern. We did violate the 4-hour bat pattern from down here, right? There's a little bat pattern here that got violated. This would be the double bottom, double top bat pattern, which this gets respected quite a bit. You know, when price came up in here, a lot of sellers in this range here on you know, level traders getting involved, and then boom, as this breaks down right here, this red candle, a lot of you know, breakout traders who, you know, on those lower time frames are going to be seeing price dip there, and they're going to be chasing that. So a lot of people losing money in lots of different ways on there, you know, unless you could tell that price was going to be closing up at these higher levels, which is a fine art within itself, and that's the astrology and astronomy, using numerology and the, you know, the geometric alignment of the stars and planets to trade off of. So that's definitely what I recommend anybody focus on in their trading, is the numerology, and you can see that with harmonics. You know, this isn't, if you look at my harmonic video, you're not going to see these ratios in there. You know, I say with a bat pattern you want to see 50%, but looking at the other ratios, you have 4, 5, 6, you know, you have 4, 6, 8. It's just harmony there, and then 4, 5, and then you know, 6, 6. There's just, you look for harmony in numbers, and the best way to do that is just grabbing this price and data tool, I think, and you know, seeing that price went up here 85 days or 85 whatever points, and then, you know, down here you're looking for that 85 type of figure to hone up, or you're looking for you know, 72 bars, maybe we're going to drop 7.2% or so, is very viable, right? If we were to push lower, that would be a designated range for sure, 7.22. You know, you could look at that, there's 7.1 in there, so you can see here's 7.1, we came almost down into that, and that's just the first kind of example that I took. You can see on a more extreme, and I'll use the magnet tool to be exact. On a more extreme version though, and this is kind of Jenkins' work, is you can get bigger fractals as well though, right? So price went down 90 bars. How much a week up here? 13. So you're just looking for the harmony in numbers. 173, you're looking for maybe, you know, what happened at 173 bars. Since this was, it dropped 173 points. 173 bars. We're putting in a nice kind of cycle low. Right here, boom, and we've rallied. We get big energy off of that. At that kind of point in time, there's a time and price equilibrium, right? Price and time equilibrium. 173 points down, 173 bars later. Here on the daily chart, you switch the time frame up. You're gonna want to be looking at different numbers and things, but that's harmony. Also things like the pi ratio, which again you can see all this on Jenkins YouTube, but just a quick run through it. Here we had a low of 120, and then you're looking at you can look at 12 out of that. So you want to just grab the numbers and break up the numbers. So like 12 bars later was I'm just removing the decimal and reading the first two numbers. We had kind of a first midpoint cycle. What do we have here at 120 bars? Another kind of midpoint cycle at 120 bars. Right there, boom, and we took right off for days, just blew. 1,206 would be the next, or you can look at that price of being 1,026. We hit that right around right back here on this 126 on this ride up. Oh, sorry, that's too much. 1,206. All right, so something like that in here. Price was here, there's equilibrium, and we dropped for months right after that. That's harmony between price and time, literally numerical harmony. So you need to have a different kind of perspective of the markets for that to make sense to you. It definitely makes you look at the market with different possibilities as to what could be something that you could be looking at, right? So here's 223, and then what do we have? 223 bars later. We're kind of putting in this cycle point here, right? Kind of midpoint, like highs and lows come in from here, and this is just sloppily done. You can take price itself here. What do we have? Oops. We had a high here of 146. So I'll just type that in my calculator. I just pulled my calculator up here, 1.4690, and then times that by pi, which is the 3.14, which your calculator has. That equals 4.6, 614, and so you can count out from this point, you're looking for 4.6. You could debate that, we haven't even seen that, right? You could say that this is 2.4, and you want to see from that high, just using the pi ratio, you want to see 4.6 I said? You want to see 4.6 come in, which would be way down here, right? There's the 4.6. If I'm just taking the pi, right? And it doesn't say 4.6, but it's 4.6, right? That's numerical harmony. And just whipping that out to a random amount of 1,266 days, kind of giving you squaring things off, right? Boxing things up. That's where you can get creative and start throwing this stuff in, right? Start throwing in fans and stuff. So it's a lot of it is going to be a science and it's going to be a math, But a lot of it, I love the Philly aspect of it. Find that harmony, find expected kind of time cycles, zones, not exact. Find your roundabout areas, right? Say, okay, well, prices went down this amount. I want to see it move that amount at least. You want to see it move at least that amount before we are in harmony, and that's what it does in geometric formation. Right? Price comes down this amount, it moves sideways for this amount or retraces before it can then continue on lower. We then get the exact same thing here, basically. So I would be quite surprised if this market didn't kind of find some equilibrium here of sorts before rallying. But by all means, there is waves, and like I said, we are at this point in here, we are at pretty deep into trine. And that's where you're seeing just the last couple days have really dropped off, as I had been predicting. But pretty upset that little bat pattern didn't work in there. But those situations, if you're going to trade harmonics, having that 4-hour bat pattern get violated in here, because I'm on the daily here, so the 4-hour bat pattern was this guy here. And having this get violated, you can almost have a reversal order, because you know that it's going to be coming up and testing some more structure. So this might not be all we're seeing here. We could easily have a 1, 2, 3, 4, 5, and put in a bit of a double top bat pattern up here as well, right? So as far as price action goes, you're all over the place. It doesn't matter though. Just find something that you like and trade it, whether that's a channel, whether that's this, that, or the other. But you have to respect its stop losses and expect its performance as well. And that comes with backtest and trading it. You can backtest all you want for days. Your live performance, they're going to be a little bit off of your backtesting. In some cases, some markets may be dramatically. So, backtest. Make sure you know what you're looking at. And the same thing applies when we're talking about the astrology as well. Don't just skim over topics. Get right into it. See how it affects price. See how on specific days and when certain aspects like trine and square coming in, it does affect the price, and you see that geometry in the astrology, and you can see the numerology, through squares and hexagons and circles and things of that nature. But basic kind of price action here, we've been kind of straight up here. I would expect, and I ran over this in my trend line video. This is kind of how I use them. I'll use them for channels. I don't like trying to get exact with them. Unless I'm doing an LA wave count with the ABCDE triangle, but I like to just kind of throw them on there. I find that middle point kind of in here, and that's about it. And I'm trying to find the just playing the energy. So there's kind of a bigger fractal energy here, right, which could be bringing us way up into something like that, which would be targets up into the 144s area. But there's also the smaller fractal, right? There's the immediate kind of what it's done. Even this is kind of an intermediate in between the two. But there's this kind of immediate trend as well. So you want to be following the different trends. And as of right now, it looks like we've kind of ran into this kind of major energy, major resistance up here, right? This is a nice little zone. Whenever you see these little kind of half pocket things, whatever you want to call them, on a big drop down, a lot of the times, and vice versa on the way up, a lot of the times you will get that level tested again. And that's kind of what we're doing right now. And came up in there and tested that level nicely. And again, at that point, going square and trying, and back here is when when I first got confident in my astrology, in my numerology, I made a call that USD CAP was going to be long, and sure enough, it kept flopping. It was a square price at that time, and now with the geometry, it's actually rotated over, and we are trying up here now at this level. So you could say that banks control markets, but they have very little influence. It's my belief that the most influence they have would be on like when you get down into like the hourly charts, they can throw some force to really rip you out of positions. When you're buying here and price goes like this, up here you're like yes, and then you're like, oh, you might even close as you start to break. And you're looking at the 15-minute, you're looking at even more data in here, and you're seeing price dip below her, you're seeing multiple bars dip below. You're sweating. If it comes up here, you're like yes, and then a big spike, like you're scared. And this is just, you make mistakes, and it's my opinion that banks can create these wicks. They can create these little patterns, and they can set off your indicators, especially. Let's have a look at something pretty standard, and this is a great setup for this indicator for stochastics, but you're still going to see points where it just doesn't really hold true, right? Like here's some crystal clear divergence right here on that 4-hour bat pattern that I was talking about, right? Well, this is the 1 hour, but this was the pattern. It was this guy here, and I was hoping this zone would hold, and we also had the divergence come in, right? So these harmonic, the harmonic pattern is a harmonic pattern, but the point I was making is I do believe that they have the ability, if they so choose. And I mean, if you print money and it's just a nothingness thing to you, which it is, then they sure enough that's exactly what you would want to do to throw investors off and just take their money in the process. I'm sure. So something to think about. To me, that's kind of the most they can do is use key levels and key times to alleviate stress. As I said in a lobby, it was in the TradingView lobby that I was saying, it's my belief that banks really don't control markets at all. If they do, it's very little, and they use astrology for that. They certainly use astrology in their trading, or anybody that's successful does. Trading chart patterns is just not going to be in the long run for you. You need to manage money perfectly every time, and make sure that you're getting those 2-to-1 rewards every time, and that you're not getting greedy and holding a losing trade. You need to manage that money flawlessly, and the money you make is very time consuming, and it like I said, here's a prime example of a flawless harmonic pattern. The math was showing itself and everything in the indicators. It just didn't pull through on the 4-hour, which then transitions into a daily, right? So is the same thing going to happen here? I don't know, let's pop on our stochastics. We may just be getting faked out here again, right? Looks like it's anyone trading indicators seeing this kind of thing. The RSI is probably doing something very similar as well. I'm not sure if I have there's the RSI. I've got it on 52. Let's drop it down to its default. Let's put it on default. It's kind of came up and made a high, right? People will be looking at that as like a W kind of pattern, right? I like to trade on it with a little bit faster at 9. And I typically adjust these as well. Not sure where these are at. Ooh, 85.15. Alright, so we're not really oversold or overbought, but we do have a nice tip coming in, a top kind of coming in on the RSI. Indicators are kind of telling you to sell at this point, so very well could be seeing the same thing. The Ichimoku is kind of telling you to buy, but by all means we may see a break below here and then gap up again, right? And that to the astrology. Anyways, I've been blabbling for going on for a while, so I'll wrap this video up. I just hope I made it clear about the the time frames. It really doesn't matter what time frame you're looking at. Price is price. You know, it's about managing your money in real time and having confidence to have targets where I'm only risking this little bit, but my goals are going to be up here. I don't care. I can lose fucking 20 trades in a row. But when I fucking bang that out though and hold that, that's your win though. That's what's going to separate you from a lot of other traders, is if you can find yourself a nice low risk or whatever and just get ahead of the market. Don't cut your wins through excitement, think, oh, it's going to turn on me. That's where you have to have the confidence that this market is going to go higher and test these these previous highs, this level of resistance here, right? Whereas here is a level of support. The market rallied. We've came back up into this level of resistance and we've dropped since, right? Real basic stuff, creating that triangular continuation pattern. All right, so cool.